All right. Well, first of all, thank you everyone for joining us. Thank you for coming, if it's late or early for some of us. My name is Uma, and I'm here on behalf of BLS Global. For those who don't know us, we have been active in citizenship and residency industry for over 15 years. We worked with our clients from all over the world and hosted global investment migration summits and partnered with leading legal, financial, and real estate professionals to help investors find their right pathway for second residency and citizenship. So today's webinar, we're focused on the Portugal Golden Visa, and in particular, an exciting option through the Three Comas Portugal Golden Income Fund. It's an innovative and flexible investment route. And we're also fortunate to be joined by one of the most experienced legal professionals in the space who will walk us through the legal requirements, recent changes, and answer your questions. So we have two experts with us today. It's Raquel and Alex. Thank you both for joining. I'll give a more detailed introduction for each of them shortly, but before that, I'd like to quickly walk everyone through the flow of today's session. So we will begin with Raquel, who will give us the most recent updates on the Portugal Golden Visa program. Next, we will have Alexandre presenting Three Comas Golden Income Fund and explain how it fits into the current investment landscape. And then Raquel will take floor again and tell us more details about the legal practices of the program. And then after the presentation, we'll open the floor for the live Q&A session. Everyone is encouraged to submit your question in the Q&A box at any point during the session. And at the end, we'll dedicate time for both Raquel and Alex to address as many of them as possible. Finally, we'll wrap with a short feedback survey. It will only take a minute. And after the webinar, all attendees will receive a recording of today's session. And you will also receive direct contact details of today's panelists in case you'd like to schedule a private consultation. And of course, if you'd like to help arranging a meeting or need further guidance, feel free to reach out to BLS team as well. We'll be happy to assist. All right, and now let me introduce you to Raquel Esteves, partner at RME Legal. She's a highly experienced lawyer with a strong background in international tax consultancy, compliance, and litigation. Before founding RME Legal, she held leadership role in law firms, tax consultancies, and migration services, managing teams and cross-border projects. She's passionate about providing clear, pragmatic advice and has assisted many private clients with every aspect of relocation and golden visa process. Raquel, you can start.
Thank you. Thank you everyone for attending. Thank you, Alex, and thank you, BLS, for the invitation as well. We would like to start by probably addressing one of the hot topics on the golden visa sector, which is the potential changes on the citizenship law in Portugal. First of all, the first thing we would like to state is that the Portuguese Golden Visa program is a residency by investment program. It's not a citizenship by investment program. So what you should expect when you apply for a golden visa is, first of all, residency in Portugal that will allow you to relocate to Portugal whenever you decide to, with low minimum stay requirements, giving you a lot of freedom. Potentially applying if you wish for permanent residency, and of course citizenship is an option, but should not be seen as a guarantee or as the last as a guarantee promised by the program. Of course, we understand for most applicants citizenship is very important, so we want to clarify how these changes may or may not impact your golden visa application and your plan to get residency in Portugal. Assuming the measures that were announced by the government and have not yet been approved and are not yet in force, we can potentially be looking into an increase of the number of years of legal residency you need to have, from 5 years to 7 or 10 years potentially. One of the main aspects we like to highlight is that it is not the end of the world or the end of the program, because after 5 years, you will always have the option to apply for permanent residency. Permanent residency will allow you to withdraw your investment after these 5 years. So you don't have to reinvest it more than expected initially. And the residency card will be valid for 10 years, giving you enough time to cover whatever the remaining period is for you to apply for citizenship if you wish. You also have a language requirement for permanent residency, but you would have to take the language test for citizenship anyway. So we think the result is, if these measures are to be implemented, this result will be very comfortable for investment to handle, and it's not a dramatic change on your in your plan. During the permanent residency period, until you apply for citizenship, the minimum stay requirements remain the same as they were during your golden visa. So we are talking about 7 days per year or 14 days every 2 years. We will address those details later on. But as a final note about these potential changes, we would like to highlight that this has not been implemented. There may be, and we strongly believe the proposal will be reviewed in Portugal, and possibly there will be a grandfathering period, meaning everyone who is really interested in applying for the golden visa, in my opinion, they should start the process now, as long as they clearly understand the program and clearly understand the investment they are making, and it's a safe plan B. If you start the process now, you are in a better condition to potentially be covered by the existing rules under the citizenship law and not affected by changes. This is not guaranteed, of course. There's a legal procedure in course, but this is our understanding. Even if the law changes, I would also like to highlight that Portugal remains the Portuguese Golden Visa, even after potential changes, would remain one of the few, if not the only one, golden visa program in Europe that allows you to actually get into the stage of applying for citizenship without the need of relocating during the process, without the need of becoming a tax resident in Portugal, until you achieve potentially your goal if it is citizenship. So we find it still very attractive, even if the rules change, because of these two special conditions of the Portuguese regime. Uma?
Thank you so much, Raquel. And now we will have Alexander taking us through the details of the fund.
Okay, great.
And
Where's that?
right. And I want to talk a little bit more about Alex. So Alex is a business developer director at Cunha Capital. He has over 20 years of experience in business development, investor relations, and investment sales. He founded ACE Consulting, a real estate investment advisory firm, and now he leads business development at Cunha Capital and regulates an independent Portuguese asset manager, and he knows its innovative fund structuring and modern asset allocation. So very excited to hear from you as well, Alexander. So you can start.
Okay, great. Thank you, Uma. Thank you for the kind introduction, and thank you, Raquel, for all the context, which is key in all this situation. So, hi everyone. Thank you for attending. I will try to be brief and to the point, so that you can frame us as a management company in the context of all asset management companies in Portugal. I would start to say that we are not the biggest, we are not also the smallest. We are relatively recent as an asset management company, but we were born, let's say, on the back of one of the most experienced investment managers in Portugal. I will go into that. Regarding the fund, it's a proprietary fund. So we have designed this fund internally, thinking specifically in golden visa investors, their concerns, their let's say concerns regarding the usual structures that are available for this investment route. So that you have an idea, we have in Portugal literally dozens of asset management companies. and we have over 60 Golden Visa eligible funds. The majority of those funds, I would say close to 50, are closed-end funds, venture capital funds, funds related to developing a business. And the minority, so the remaining, let's say, 10 funds are open-ended funds. The main difference between a closed-end fund and an open-end fund is the lock-up period. Closed-end funds, they come with a lock-up period. You need to be invested for a period ranging from 6 to 8 years. They will develop the business, and if they are successful, in the end, you will exit the fund with your capital gains. In open-ended funds, the structures are very different. There's no lock-up period, so we are free to subscribe, to invest in the fund, to subscribe participation units, or to redeem at any given time. So total flexibility. So we are here in the area of open-ended funds. But we provide not only an open-ended fund, but also a daily liquidity fund, which means that all the assets in our fund can be converted to cash very swiftly in 5 working days. So that's the key aspect. Closed-end funds, the majority of funds, open-ended funds. Recently, as Raquel can confirm, the trend is towards open-ended funds. In relation to 3 Capital, the company was founded in 2022. It was founded by Nuno Serafim and Patrick Abel. Nuno Serafim was the former board member, executive board member and chief investment officer at the largest private asset management company in Portugal. He was responsible for supervising 14 portfolio managers, 28 funds, and a total of over 4 billion euros in assets under management. He was, still an employee, nevertheless, at the top of his career, but a little bored of working for others, and he decided to launch his own asset management company. And fortunately, during the period he was thinking about this new venture, he met Patrick Abel, being Patrick a German citizen that, along with his brother Robert, they relocated to Portugal back in 2018 for the same reasons that everyone relocates to Portugal these days. The weather and then back then the great tax environment. So they relocated and they met socially. And Patrick is a high net worth individual or ultra high net worth individual. He's the owner of this company here called 2IQ Research that I have also on the back. 2IQ Research. 2IQ Research is a global market leader in selling specific data sets to all the biggest hedge funds in the world and also investment banks like Goldman Sachs, JP Morgan, Morgan Stanley, and also to financial service providers like Bloomberg. So they make substantial revenue out of this huge client base. And Patrick, because he's wealthy, he decided to start investing in venture capital, providing money to startups across the world. And by the time he relocated to Portugal and he met Nuno, he was a little bit in the need of joining forces with someone that could act as like say the head of his family office. And he met Nuno, so it was like a perfect match. Nuno was looking for an anchor investor. Patrick was looking for someone to manage his family office. So they decided to launch a properly regulated asset management company, and 3 Capital was born. The first thing that they did together was to create a fund to hold Patrick's participations across several companies, most of them in the US. It's a closed-end fund. It's not Golden Visa eligible. It's one of those with a lock-up period. Actually, the fund is returning amazingly. Then the second fund that we have launched is the Global Crypto Fund. It's a 100% digital assets fund, daily liquidity fund. It's not Golden Visa eligible. It's reserved for professional investors only, specifically for institutional investors. And basically what we do here is try to make available a very seamless tool for insurance companies, pension funds, other family office to have a small exposure to Bitcoin in order to, let's say, enhance the risk-adjusted return of the portfolios that they are managing. And in a way, we took advantage of all of our experience, Nuno's experience, and the success of our two initial funds, and we launched the Portugal Golden Income Fund. The fund was incepted in October the 2nd, 2024, so basically 11 months ago. We jump started the fund with our own capital. We invested the initial 1.5 million. We believe in skin in the game, and we have designed it in order to try to tackle all the concerns of golden visa investors. So it's a open-ended fund, no lockup period, daily liquidity. All assets can be converted to cash in 5 working days. It was the first multi-asset allocation fund to be available for golden visa investors. We allocate across 3 main asset classes, which is fixed income. The majority of assets are invested in fixed income. I will go into that. And the remaining assets are invested in high growth assets spread between equities and alternative assets. The fund, like I was saying, was incepted in October the 2nd, 2024. And here we are 11 months later with reaching 65 million invested in the fund. Spread it, well, we have close to 220 investors, 80% US, and the remaining 20% basically Turkish investors. So going a little bit more in depth into the fund allocation or the fund investment strategy, as I was saying, the fund invests 70% in Portuguese corporate debt, which means bonds issued by the biggest and the best Portuguese companies. And then 15% we reserve to invest in US equities and other 15% in digital assets, namely Bitcoin. We recently adjusted, that's why you are seeing a strategic allocation pie chart and a tactical allocation. We recently adjusted slightly the allocation. We decreased a little bit the risk in the aftermath of Trump's Liberation Day and all the turmoil and lack of visibility in the markets. And we have increased the equity bucket to 20%. We have now 10% US equities and 10% world equities. So we have a broader exposure, larger diversification. We have exposure to European equities, Japanese equities, and also emerging market equities. And in the alternative assets bucket, we reduced from 15 to 10, and we are now running 7% Bitcoin and 3% gold. This is a picture of how the portfolio, let's say, works. We have the 70% Portuguese corporate. I'm sorry, this is blocking. We have the 70% of Portuguese corporate bonds bucket, and the idea is that from that bucket you can expect a 3.5 to 4% annual return. So if you are invested over a 5 or 6 years investment period, that return will accrue and that return will compensate any drawdown that we can have in the growth bucket of the fund. So if world equities or especially if Bitcoin, if those come down, the accrued return that you get from the bonds component of the portfolio will compensate for that drawdown. So this translates into a capital preservation fund. If you are invested, if you stay in the fund 3, 4 plus years, this is basically a capital preservation fund where the likelihood of losing money is close to 0 or even 0. On the other hand, if world equities and alternative assets, if they perform in the next 5 or 6 years the same way that they have performed in the past 5 or 6 years, then the portfolio can easily achieve a 7 to 10% net annual return. So on one hand, you'll have capital preservation. On the other hand, you'll have this, let's say, optionality to have very interesting returns. It's a capital preservation fund, like the sentence that you have on the bottom of the screen. It's a low risk capital preservation strategy with high upside potential, and it's not a high risk portfolio with downside protection. I will try to fast forward. Regarding bonds, we only invest in investment grade bonds, bonds rated above BBB minus. We only invest in bonds with amounts outstanding over 500 million euros, which means bonds with a high level of liquidity, bonds that are being also invested by pension funds, insurance companies, and family offices. And then obviously we apply a fundamental analysis, not especially to select the company, but to cherry pick the bond itself. And we end up with a portfolio. This is our current portfolio. We are going to continue to build up in this portfolio, at least until we reach 75 to 100 million in the fund. We are not far from that. So from top to bottom, you have the biggest private bank in Portugal. Second, you have Fidelidade, the biggest insurance company in Portugal. This company is not listed. It's privately held. We cannot invest in their shares, but we can buy their bonds. So also a difference between a mainly bonds fund and an equity fund is that we have a broader investment universe. We can invest in listed companies, but we can also invest in privately held companies. And Portugal is still a very traditional market where most of the best companies are still owned by families or very strong foreign shareholders. As I was saying, then you have Novo Banco, the second largest bank in Portugal. Caixa Geral de Depósitos, the biggest financial institution in Portugal. Again, it's state-owned, so we cannot invest in their shares, but we can invest in their bonds. EDP, the electrical company, the biggest electrical company in Portugal. Galp, oil and gas company, also the biggest. Then a smaller bank, very conservative. They basically finance agricultural projects in Portugal, and REN, probably the best company in Portugal, infrastructure company that is responsible for distributing the energy across the country. So you can see that the average yield to maturity of the current portfolio is 3.5%. We are growing. We expect to reach 4% in the next few months. The average rating being BBB, so very stable, very sound. We don't want to mess with this part of the portfolio. We need to keep it as robust as possible, also to run it in a very cost-efficient way, so we avoid unnecessary transactions in this portfolio. We are now a relevant player in this space, so we are gaining access to better investment opportunities. Specifically, we are being invited to go to primary issuances, which means that instead of buying bonds in the secondary market, we can talk directly with the bond issuer and negotiate the price and engage with them and try to come up with the best possible deal. Growth assets. I believe, I'm not exactly sure that I'm talking to a mainly US audience, so I don't need to take a lot of time to talk about S&P 500. I said before, in our growth assets bucket, we run currently 10% of US equities. We don't stock pick in the US market. We just buy the whole market through an ETF. It's the Amundi ETF. So we invest 10% in S&P 500 and the remaining 10% to cover, let's say, the rest of the world equities. We use MSCI World Index excluding US and the MSCI emerging markets excluding China. So we have huge diversification from this portion of the portfolio. We expect 7 to 10% annual return. Hopefully, markets will continue to evolve in that direction. Regarding the alternative assets bucket, digital assets, or specifically Bitcoin, that now we have only 7%, but we plan to increase our exposure to digital assets. We invest either through a BlackRock ETF, a very highly liquid instrument, or through our own proprietary fund, the Global Crypto Fund, where we have an exposure of 85% to Bitcoin, 10% to Ethereum, and 5% Solana. So that you have a clear notion, this 30% bucket, it's going to do the heavy lifting in terms of expected returns. And the idea is basically to mix uncorrelated assets. And I will take just a second to explain. The fundamental idea in our portfolio is that we can have exposure to risky assets or high risky, but also high return assets like Bitcoin. We can have them in the portfolio because Bitcoin and Portuguese corporate bonds, they have an asymmetric correlation or negative correlation. It means that they don't move simultaneously. When Bitcoin goes up, bonds are moving sideways. When Bitcoin comes down, bonds are still moving sideways. It means that this portfolio has the ability to cushion or to absorb Bitcoin volatility. And this is very clear in this slide, where we elaborate a little bit about the impact of Bitcoin in a traditional portfolio. And it's very simple. If you are managing a traditional portfolio, 60% equities and 40% bonds, if you sacrifice 5% from equities and 5% from bonds, and if you allocate those 10% to Bitcoin, what happens to the return of the portfolio, to the annualized return, is that the annualized return grows by 250%, not 20, I'm sorry, 250%. So it goes from 6.2% to over 15%. But if you look at the annualized volatility or the risk, let's say, only grows 50%, only goes from 8.5% to 12%. That means that you get a much better return without increasing in the same or without incurring in the same amount of risk of volatility. That translates in a much better Sharpe ratio. So if this works in a traditional portfolio where you have 60% equity and 40% bonds, you allocate 10% to Bitcoin. And so let's picture this in our portfolio where we have 70% bonds and 30% growth assets. In this case, in this context, Bitcoin, it will still, the Bitcoin volatility, it's much more diluted. So we can, let's say, extract most of the upside when Bitcoin goes up, but we are very protected when Bitcoin comes down over the long run because we have a steady return coming from the bonds component of the portfolio. So that smooths the risk. And basically, that's it regarding the fund and the investment strategy. This is just a slide to show that we don't need, there's nothing in our prospectus saying that we need to be invested in digital assets. We have the ability to adjust between 0 and 20%. Probably in the next few months, we are going to increase our exposure to digital assets, trying to extract more return. In the past 11 months, the fund returned 7%, which is not bad in 11 months, but we want to increase that return a little bit, so probably we'll increase our exposure to digital assets. And this is pretty much summarizes everything that was said. On the left side, you have past performance, which means performance scenarios. On the left side, you have a back testing chart. It means that we simulated what would have happened if the fund would have been founded in 2019. We didn't exist in 2019, but we needed to simulate. It's a synthetic replication of the fund returns. As you can see in the bottom, the annual return, or the annualized return, is over 10%, so pretty much in line with our convictions. And if you look to the right side of the slide, you have projections of future performance. This is a mathematical model. It's called the Cornish-Fisher expansion model. There's the modelization, it's there for several different scenarios. We just insert the data of our fund, which means the allocation, and the output are scenarios, performance scenarios with different degrees of probability. So the most probable scenario, it's the moderate scenario, where things will, in the next 5 years, be basically replicate what happened in the past 5 years, let's say business as usual. In this moderate scenario, the fund will return over 10% if you are invested over in a period greater than 5 years. Then you have a favorable scenario. In this scenario, obviously, US equities and Bitcoin are all doing very well with great performance. In this scenario, the fund can easily return a 10%, 20% annual return. And finally, which I believe it's the most important and that concerns most of the investors, is what will happen to my money, to my investment, if markets go south, if things go bad. So in this unfavorable scenario, it makes very clear what I said in the beginning. If you are invested for a short period of time, yes, you can lose money. Why? Because you didn't give time to bonds to do their job, to compensate or to cover to drawdowns in the risky bucket of the portfolio, in US equities or specifically Bitcoin. But if you are invested long enough, 3, 4, 5 years or more, then the bonds will compensate for those drawdowns. And clearly, the model states that in an unfavorable scenario, if you exit after 5 years, you'll have a positive return. It's not an amazing return, it's close to 4%, but it's still a positive return. So this means that bonds will, even in an unfavorable scenario, this is a capital preservation fund. After 3 years, the likelihood of positive returns, it's borderline 100%. And that's it. Well, this is a slide that I don't even remember that I had. It's a comparison between the fund that I'm presenting and some other multi-asset funds in Portugal. We are the white line. It's a little bit for bragging or showing off, but we did much better than all the others. We do better when markets are good, and we resist very well when markets are doing not so good. And why? Because basically we have 70% bonds. So when markets, when they suffer drawdowns, namely equity markets, all the risk or the drawdown, it's basically absorbed by the bonds component of the fund. Bonds continue to do their work of providing a steady return. Then to end fees, the fund it doesn't have a subscription fee, so there are no entry costs, nothing to add to the investment, no subscription fee. Then we have 2 available share classes, both with no subscription fee. Share class A and share class D. Share class A, it's an accumulation share class, kind of Warren Buffett accumulation, meaning all the gains returned by the fund are automatically reinvested in the fund, and they benefit from compounding effect. And then we have share class D, where we basically grab all the return that we get from the bonds component of the portfolio, and we pay out to the investors annually. The remaining gains, the ones generated by US equities and Bitcoin, they continue to be reinvested, and they will be paid to the investors upon exit of the fund whenever they decide to exit. Management fees. So we don't have subscription fee, and we have a relatively low, I would say low, management fee. For share class A, the accumulation share class, the management fee is 1.5%. For share class D is 1.75%. It's a more costly to manage share class. And because we don't have subscription fee and we have a low management fee, we decided it was fair to have a performance fee for alignment of interests with investors. And we have a 20% performance fee if the fund, applicable only if the fund returns above 5% net, meaning net after fees and costs. Only then we can charge 20% of the returns over 5%. So, for example, if the fund returns 6%, we can take 20% of the 1% that is over 5, which means 0.20%. If the fund returns 10, we can take 1%, which means 9 for the investor, 9 net for the investor, and 1% for us. And finally, we have a redemption fee. It's of little to impact for Golden Visa investors. It was thought that way. It's a sliding scale. In the first year is 5%, on the second year is 4%, third year is 3%, by the fourth year is 2%, on the fifth year is 1%, and after 5 years and 1 day, it's 0%. So everyone deals very well with this situation. It protects us from Portuguese investors. They tend to jump between funds, and that would cause us problems in managing the bonds component of the portfolio. So this is like a negative incentive, like saying, don't come to this fund because we want to keep our bonds portfolio as steady as possible. So we don't want clients or investors coming in and out of the fund. And that's it. Basically, we have obviously depository bank, which is an extra layer of safety. They are the safekeeper of all the shares that we issue, all the participation units that we issue. They keep a track record of all participation units, the registry in the client's name, with the client's Portuguese identification number. And we have obviously costs that are bared by all the participants in the fund, including the depository bank, but also auditor and accountant, and the Portuguese market regulator. So to be totally transparent, the old costs are now down to 0.12. So if someone wants to really know exactly how much we are going to charge annually, we are going to charge for check, let's say 1.5% plus 0.12%, so a total of 1.62. That's all that we are going to charge. There are no hidden costs. Everything is 100% transparent. And the team, we do need a team to do all this. I already talked about Nuno, one of the co-founders, Patrick. Well, just to highlight José Carlos Monteiro, this highly seasoned professional that we went and grabbed from Nuno's former company. So before working with us, José Carlos Monteiro was the head of operations at the largest asset management company in Portugal. So he was responsible for the operations of a 4 billion or 5 billion euro asset management company. He's now working with us. And also we have David Duarte, that I also like to highlight. David Duarte, our investment director, is very connected with bonds because he was the former head of markets at the Portuguese debt agency, like the equivalent of the US Treasury in the US. And he spent there more than 10 years managing or very complex situation, edging the yield curve for the Portuguese government bonds. So he's a bonds expert and someone where we really rely to take care of our bonds portfolio. And that's it. Thank you.
All right. Thank you very much, Alexander. I enjoyed it a lot. Thanks for including that slide showing the comparison with other funds. I think that was really good. Okay, so we have question in the chat session. We have some question in Q&A box, but before we start answering those questions, Raquel will add a little bit more on the legal part, and then we will go directly to the Q&A. So Raquel, you can take the floor.
Alex, I need you to stop sharing your screen, please.
I'm sorry, Raquel.
No problem.
It's done. Okay.
Perfect. I think this very, very brief presentation about the general legal rules of the Golden Visa We'll clarify some of the questions in the questions box. But I'll be brief to make sure we have time to answer everyone's questions. So one of the most important questions is, of course, what are the options in terms of investments? And we have the funds route we have just discussed, and Alexandre has just presented one excellent option for an open-end fund. That gives you the flexibility you may need in the future if your circumstances change, if you urgently need the money, if you are no longer comfortable with your decision. The fund or an open-end fund would give you would make this decision a little bit easier because it's not a decision you need to make and a commitment for 7 or 10 years. You have to invest at least 500,000 euros. It has to be this amount of investment in Portugal, and the fund should not be invested in real estate. So that's an important topic. The real estate option is no longer available in Portugal. So some creative ways to make real estate investments through funds should be properly assessed to make sure there is no problem. As Alexandre told us on the Portugal Golden Income Fund, we don't have that problem at all. We also have the donation option, which is, as the name say, a donation, 250,000 euros. You have to bear in mind that you make the donation before your golden visa being approved. So if there is a problem with your process, the donation is gone. So please bear that in mind. You have also the possibility to start a company, to create jobs. Typically, the profile for a golden visa investment is someone that is not as interested in coming to Portugal to be actively working on a business. So once for investors that are looking for a more passive source of income and passive way to get to the golden visa, the funds route is, of course, the most appealing and is also the most common in Portugal at the moment. This investment of 500,000 euros will not be only for you. You can bring your family. So you can bring your spouse or civil partner as long as you can prove that you have been living together for the past 2 years. If you have children, it becomes even easier. So that's an option as well, the civil partnership. You can bring your children when they are below 18. When they are older than 18 years old, we need to make sure they are still studying, they are not married, and they depend on you. You can also bring your direct parents or parents for your spouse or your civil partner, as long as we can again prove that they are dependent on you. And if you have siblings in a condition that you need to support them, we can always also bring that family member. So it's a pretty good amount for the number of people it can cover with just one investment. In terms of steps to be taken, the first step it's getting a tax number. It's probably the first thing everyone does when interested in moving or investing in Portugal. After that, you would have to open a bank account or make a direct investment with a fund. Some funds allow you to invest directly with them, so you don't need to bother and you save time in opening a bank account, which can take around, let's say, 1.5 to 2 months. After that, you need to make an international transfer. So the funds for your golden visa need to come from outside of Portugal. This is very, very important. You formalize the investment, so you make the investment. We will get the statement from the fund, the management entity attesting the investment is completed. You will gather all your personal documents for the golden visa application, and we submit it online. Once the application is submitted online, there will be an analysis period and there will be a pre-approval where we will be informed that everything looks correct and you and your family should come and attend the biometrics appointment, okay? The minimum stay requirements will only start from the moment you get your residency card, so you don't need to be worried about the need of traveling to Portugal before that. I think it's a quite fair process in terms of steps and quite transparent. In terms of citizenship, I think some people were not here in the beginning. You will get the recording, of course, but there may be potential changes that will be in principle discussed and voted in October. Under the current rules, after 5 years of you submitting your golden visa application, this under the current rules, 5 years after you submit your online application, you can be eligible to apply for Portuguese citizenship, provided you are of age, so 18 or more, provided that you have knowledge of the Portuguese language, A2 level, and of course you have not been convicted by any final sentence to prison, and you do not represent any threat to the national security. Those are the general rules. Typically, as I say to all our clients, each case is a case, each family is a family with their own specific conditions, the age of their child, everything can play all these details can play a major role in your decision, so we can put together a plan for your family. This is very important. Those are general rules. And in what regards specific potential changes in the law, we are always in direct contact with clients, addressing all the potential implications for their specific case and how could we find a solution that works for that specific family. And here are my contact details. If you need anything, of course, I'm more than happy to help.
All right. Thank you so much, Raquel. I think you covered also a lot of questions that we had in our chats, but we can start the Q&A session now. So one of the questions I want to address for Pierre Bell, that yes, everyone will receive the recording of this session, and everyone will also receive the contact details of Alex and Raquel, so you will be able to speak with them in private. And then we can start now. And the first question, Charles Martin is asking, how many funds have you completed? Alex, this is a question for you.
Yes, I saw here the question from Charles. I believe that completed is related to closed-end funds that we have launched and managed and then exit successfully, meaning that we found a buyer for all the assets in the fund in the end of the maturity. In our case, none. We are basically a management company focused on open-ended funds, open-ended strategies. The only closed-end fund that we manage is the family office fund, and it's now 3 years. It's a 6 years maturity fund, so it's basically halfway.
Okay, all right, thank you. Then the next question is from Phil. That's actually a very interesting question. He wants to know if after 5 years, he would be able to qualify for the passport, but he doesn't want it. Can he just renew his residency?
Yes,
Raquel will
definitely.
answer.
Yeah, Phil, it's not mandatory and the program does not end after 5 years, okay? It's a residency permit, so the cards will be valid for 2 years, another 2 years, another 2 years. You have three options. Whether you keep renewing it every 2 years, but for that, you would have to keep your investment in. If you want, sorry, if you still want to be covered by the golden visa rules, meaning spending only 7 days per year or 14 days every 2 years in Portugal, you need to keep your investment. If at some point you actually relocate to Portugal, we can convert your residency permit into another type of residency permit so you can withdraw the investment. Second option, if you don't want to keep renewing your residency permit and if you don't want to keep the investment, you can apply for permanent residency under the golden visa scheme, meaning you can keep the same minimum stay requirements and you can withdraw your investment as soon as your permanent residency is approved. So this is an excellent option, and this is also very attractive for those applicants where their home countries do not allow them to have multiple citizenship. So for those applicants, it makes much sense, and we have a lot of people applying for the program for permanent residency and not for citizenship. And of course, the last option, if you wish, is to apply for citizenship. the main difference between permanent residency and citizenship, so you can have a clear idea, is that with a permanent residency, you cannot vote in Portugal. Okay. And with the permanent residency, you are not entirely free to move to any other Schengen country. Okay. With a residency permit, you have the ability to stay in Schengen as a tourist for 90 days over 180, so almost 6 months per year. With the passport, you have the ability to actually relocate permanently to another European country. But I must say that if you have the need or you have the goal of moving to another European citizen, the fact that you have a permanent residency in Portugal will help that process a lot. So yes, permanent residency would work just fine. Citizenship is actually not the only option and not the only freedom that the Golden Visa provides you.
Thanks so much, Raquel. Okay, we have next question. How do we know that the funds presented are eligible? Is there any certifications? So I see Alex.
No certifications, just good experience and sound legal statements from companies like Raquel law firm. So basically, the ecosystem evolves around investors that already got their golden visa from IMA, and that's basically 99% of the closed-end funds experience because they were older. They are older than the open-ended funds. The only open-ended fund with experience where investors already received a golden visa, I believe it's Nuno's former company, IMGA. They also run a golden visa eligible fund, a 100% Portuguese equities fund that we don't really like, but it is what it is. And Nuno obviously came to 3 Capital with that experience. So to that, we added legal statements from several law firms. Even if we didn't have the legal statements, we have due diligence. No lawyer in Portugal related to the golden visa investment space will allow an investor to proceed with his investment, with his golden visa applicancy, without properly verifying and scrutinizing the fund prospectus, all the fund legal documentation to make sure that the fund is eligible for golden visa purposes. Basically, the fund needs to comply with allocating at least 60% of its assets to Portuguese companies or commercial companies headquartered in Portugal. Also, the fund needs to have a life expectancy exceeding 5 years, and the fund must not it cannot be a real estate investment organism. That's totally out of the question. And also the fund, it's forbidden to invest directly or indirectly in real estate. Those are the key, that's the framework. So if a lawyer looks at the fund management regulation and all of that is, let's say, check, it's compliant, the fund is eligible. And there's no reason at all for anyone in the Portuguese or the Portuguese immigration authorities to reject that application. It's compliant with the law. So,
thank you, Alex. That's make it very clear. The next question we have is by Alfin, who asked in the chat that what will happen if legislation changes when process is already underway?
Okay. I think that one is for me. Difficult ones are for me. We must understand something very clearly, as I stated in the beginning. The Golden Visa is a residency by investment program. Citizenship is a separate law, okay? If there are any changes to the residency by investment law that affects the Golden Visa, those will never affect applicants under the process, okay? They are only valid for the future. The situation we have at the moment is we are discussing a change on the nationality law, and the nationality law is separated from the golden visa law. So a change on the citizenship law is not a direct, it does not affect directly the golden visa program. What we may argue is applicants had a legitimate expectation of applying for citizenship after 5 years. And this is something we believe the Constitutional Court will be very empathic with and potentially will deem as unconstitutional, as we understand it, any change to the citizenship law that does not guarantees a transitional period and a grandfathering clause for everyone in the process at the moment. We have still not any certainty on what will be approved and discussed in October. What will happen to everyone who are in the process. We are very confident that those will be protected. That's why I am advising clients to take the initial steps. Because I trust they will be protected, although I cannot offer any guarantee. If you are investing like Alexandre's fund in an open-end fund, the only risk you have is you don't agree with the decision and you move your funds back home. But I think this is a summary of what could happen to the applicants under the program. They may potentially not be protected. In that case, we have permanent residency, as discussed in the beginning. For those who had not the chance to see the initial 5 minutes, you will be able to review the recording.
Thank you. That's actually a question a lot of people have, so it's good that we have it answered. Patrick wants to know, he mentioned he joined late. What is Nuna history? Would you like to answer that, Alex?
Yes, gladly. He's also a good friend. So 25 years in the investment management area, banks, investment banks, being the majority of his career was spent at the largest asset management company in Portugal. Quick story. Nuno was hired by a Spanish financial group to buy an asset management company in Portugal. So he received a kind of a mandate to do that. It was on the aftermath of the financial crisis, 2008 financial crisis that hit Portugal severely in 2011, 12. So in 2013, Nuno received that mandate to buy an asset management company in Portugal. And actually, he did that. He bought the asset management branch of a bank in Portugal called Millennium BCP. At that time, the second largest private bank in Portugal. So he bought that company. The company was managing 800 million euros or 900 million euros. It was a transaction involved a multiple, so I'm not going to disclose the numbers. But anyway, small asset management company in a way for international standards, but one of the biggest in Portugal. And in the next 10 years, Nuno grew that company from less than 1 billion euros in assets under management to more than 4 billion euros in assets under management. Nuno was managing 14 portfolio managers and 28 funds. One of those funds was the Portuguese equities fund that is now Golden Visa eligible. It was a very, very tiny fund in the context of 4 billion euros. It was a 17 million euro fund. It's now a over 200 million fund. By that time, Nuno considered that that fund was the worst fund in the company. No one wanted to invest in that fund. 17 million in the context of 4 billion. But Golden Visa investors seem to think differently. So it's now a 200 million fund with 99.9% Golden Visa investors. That actually, Nuno also always tells us that poses a kind of a systemic risk to the Portuguese stock market, because if by any reason investors decide to redeem, to exit the fund, obviously the market will never absorb the amount of shares that are going to be available in the market. So probably most of those investors are going to leave the fund to exit with losses. They will have to sell the participation units in the stock market with a big discount. And that's the new story. Then he founded 3 Capital along with Patrick, ultra high net worth individual, and we are doing great.
Yeah, the numbers don't lie. I can see you're doing
The
great.
numbers don't lie. Yeah.
Thank you, Alex. This is not the type of information we would get like on the internet, so it was great to get that story from you. Thank you for sharing. So, we are running a little bit out of time, so I'll address a few more questions that I think we haven't touched up while during the presentation. So, Charles asking if the government rejects the application, does he get his money back?
The Alexandre, maybe I'll give a
I'm
brief
sorry.
note and nothing. The fact that the government rejects your application, it's not a reason for you to withdraw your investment. That's why if you have if you have that fear, you should be looking for open-end funds, because if you are looking for open-end funds, you have the option to leave the investment. You are free to wait a little bit more to get more return, or to exit anytime. As Alexandre explained, they have daily liquidity, so you have the option to exit, and that makes your investment safer. Well done.
You're very well done. Great, Raquel. Let me just add to who posed that question about well, I can not see it here anymore. But
Charles.
the only reason that I know for someone having their application rejected, it's related to the criminal record.
Yeah.
It's probably the main reason. Otherwise, if they're working with a good lawyer like Raquel, the likelihood of having an application rejected is basically
Very,
zero,
very low.
unless the criminal record is not in order. But no one will submit an application with a
Yes, exactly.
with the criminal record that is not clean. So I would say that it's almost in the golden visa space, it's almost unheard of that an application is rejected. But it's still, like Raquel said, if you invest in an open-ended fund, you can redeem immediately your participation units. So in 5 days, in our case, boom, you'll have the money in your bank account.
Great. So next question, Catherine is asking that she's Canadian. How long does it take for opening account, and does she have to pay double tax?
Okay. The bank account may not necessarily be needed. We have some funds that are taking direct transfers, which would be which is possible under the Golden Visa rules. If you decide to open a bank account, which is also an option, it may take between 1 to 3 months. I typically say 2 months to be to meet the medium time. On the second question, there is a general rule in Portugal for now, it may change, saying that if you are a non-tax resident in Portugal, there is an exemption applying to the funds distribution. This is it's a great incentive for foreigner investors in Portugal. This will only change from the moment if you decide to relocate to Portugal during the investment period, and if you withdraw or you receive any distributions from the fund, from that moment on, you can expect a taxation of around 26 to 28%. In any case, if you are still a resident for tax purposes abroad, you can rely on the exemption in Portugal, and you need to report that income in your home country.
No. I will take this lead from Raquel to add that our fund issues PFIC reports annually in April. So we are totally compliant with all of the IRS requirements for qualified electable funds, isn't it? Something I don't really remember, but we issue PFIC reporting. Our depository bank it's FACTA compliant, so they will issue their own reportings for tax purpose in the US. If you open a bank account in Portugal, you should expect 1 month, 1 month and a half to have that in order. If you skip the bank account opening and you transfer directly from abroad to the fund bank account, it will be much faster. You can obviously open a personal bank account later. That will save you basically the month. So if you decide to transfer from abroad in 15 days, you can have everything concluded, the needed golden visa declarations from banks and the investment management company. So it's a huge advantage. We also work with investors that are using their IRA accounts. They need to roll it over into SDIRA accounts, specifically SDIRA trusts. It's the best way to do it. So we are totally up to speed with all the routes that can make the investment faster, easier, especially for US investors. We have over 200 US investors, so we are more than used to deal with that situation.
Amazing. Thank you. So I think we're going to just address two more questions. Most of the questions were addressed during the presentations, but we just got a question: is there restrictions for the applicant passports? Can I apply with a Russian or Belarusian passport? I know that usually the obstacle is opening a bank account, but you just mentioned that there's an option not to opening a bank account. In that case, is it possible to apply with passports that are slightly difficult?
Yes, there are no legal restrictions, official by law legal restrictions to nationalities when it comes to applying for residency in Portugal. There has been a period of time where this application has been somehow paused on the analysis part from the immigration authority, but the understanding is now that there are no legal grounds to reject those applications. You are correct. The biggest challenge is sometimes with opening bank accounts, but you should seek advice and look for an investment fund that would accept a direct transfer from your bank account outside of Portugal. And we have been dealing with some Russian investors before, so I'm sure there will be a solution.
Great, thank you. Okay, one more question. Charles said that he's coming to Portugal this December, so that's good. He will be in touch with you guys. Robert Stewart, Charles, we will send you all the details so you can contact directly Alex and Raquel and organize a face-to-face meeting. And I will also get in touch with you in case you need any assistance to schedule an online meeting prior to that. And Robert is asking, does the money have to be transferred from the country of origin? I believe, Alex, you've answered that question.
But I may add, just to make it clear, two things very quickly. One, Raquel already answered in relation to the application for Russian citizens or Iranian, or there are some other complicated jurisdictions. From the immigration standpoint, there's no problem. Also, from the investment standpoint, there's also no problem. The problem is with the European or let's say European and US banking system. Okay, they are the ones that are very rigorous in terms of anti-money laundering verifications, and obviously there's a ban in terms of the amount that Russian citizens, for example, can have in a Portuguese bank account. So what we say is that they should try. It doesn't cost anything. They can try first to execute investment. We will run verifications, and in the end, if we are able to open account, good. That part is done. We will issue the declarations. Then they will engage with the lawyer and they will apply. And there's no reason for after the investment is successful for anyone to reject the golden visa application. So each case, it's a specific case. And regarding the transfer of capital of funds from abroad, as long as the originating account is in the name of the applicant, it's good. They can transfer from anywhere in the world. They can be US citizens transferring from Dubai. They can be Indian citizens transferring from UK. They can even, what they cannot do is to transfer from Portugal. That's the only thing that it's not allowed. The money must come from abroad. Even if they have enough money in Portugal, they can put the money out first and then bring it in again. No one will have a problem with that. But the money cannot come from a Portuguese bank to the fund bank account. A bank needs to register that the Portuguese economy received 500K new money.
All right, thank you. Guys, it's been very interactive. We had so many questions and they keep coming. I'm just gonna have one more question for each one of you and then we will finish the session. So just quickly, Raquel, if you can answer what's the law regarding the inheritance of Golden Visa?
The general rule applies. This is quite a complex topic, but you are supposed to have one law governing your inheritance worldwide. Typically, it should be the law where you have lived in the past 12 months. If you are not living in Portugal, the Portuguese law does not apply. In case you are living in Portugal, the Portuguese law may apply. You may have a will in Portugal stating that you want the law of your country of residency to apply to your inheritance. That's a good way to make sure everything is according to your own decisions. Well, it's difficult to say exactly what would apply to you, but there is no specific law. There is no mandatory rules. If you are a foreigner, you are free to choose your home country law and gain some flexibility. Uma, we cannot hear you.
Oh, sorry. Yes. Thanks so much, Raquel. And last question. There's a little bit of a finance-based question for Alex from Ashni. She wants to know what is your strategy with Bitcoin digital assets within the run? Is it of its buy and hold? Do you monitor daily? What are the returns so far with the 65M AUM?
Buy and hold. Very simply put it, we are not in the trading area. We don't believe in that. And I'm going to quote Nuno now. Trading is a race to the bottom. So we believe in a good plan and stick with that plan for the next 10 years. If the fund has a good, sound investment strategy, it will work. If you try to beat or time the market, what you will do is bad. It's not going to work. You need to have to let the allocation to do its thing, let's say. The different asset classes will work amongst themselves and they will provide the returns. We don't need to constantly buy or then sell assets in the fund. That's the good way trying to anticipate what is going to happen in the market. It's a race to the bottom. You will not be able to do that.
All right. Well,
you study the market, you have 25 years plus experience, you come up with a good investment strategy and you stick to it. There are going to be good days and bad days, good months and bad months. In the end, what it matters, it's the annual or annualized return of the fund. We have done 7% in 11 months. We are doing well.
All right. Thank you so much. So guys, this was very interactive. This was very engaging. And despite being in this industry for a few years, I've learned a lot myself. So I enjoyed this a lot. We're gonna end the session now. Just wanna remind everyone that the recording will be uploaded. Everyone will be shared the recording and we will be sharing the contact details of Alex and Raquel, so you can directly ask them your questions. And if anyone wants to go to Portugal, we will happily help assist meeting with them. And thank you so much for joining. We will quickly launch a survey for our participant just for feedback, and we will end the session now. Thank you so much for everyone for joining, and
Thank you.
Thank you. Thank you so much.
thank
Thank
you.
you, Raquel, Uma. It was great. Bye-bye.
Thank you. Bye-bye.
Thank you.
Bye.